Hi, guys, and welcome back to Marantz. Rantz, plenty of good information, a little bit of motivation, a whole lot of truth, no financial advice. If you're a GameStop investor, I encourage you to watch this video. You guys know I've been around for a long time, been making videos about a lot of things, predicting a lot of things that actually happen, and trying to warn you, right? I throw up the flares and I tell everyone, hey, guys, this investment that they're asking you to make, maybe it's not the one you should make. I've learned a lot. I've learned a lot along the years as far as how to invest, what to avoid. And everyone always says, Marantz, can you pick a winner for me? Can you pick a stock that's going to go up and pick one? And I was like, yeah, okay, I pick GameStop, right? Or I pick Costco, or I pick you can always pick a blue chip, right? Like there's a AI bubble right now. Just grab anything and run with it. But that's not it. It's not about picking winners. It's about avoiding the losses. It's about avoiding losers. Because if I lose on an investment, I'm now playing catch up, right? Like I'm doubling down. I got to make up for the losses I just made. Versus if I had a winner, the whole way through. So when you lose on an investment, you've got to win 2 times just to make your money back and or to make more money from it. So I'm just letting you know the mindset, right? So when you think about the investment that we've talked about on this channel, GameStop, great. But think about all the things we told you was going to fail, like that we're going to fail. I have a series on YouTube. It's called Connect the Dots. You can Google it. You can do it however you want to get to it. It's called Marantz Connect the Dots. Guys, there's 63 parts to this thing. And I want everyone to know we called out every single bankruptcy coming your way. We called them out well before they happen. Therefore, we're telling you what to avoid and why to avoid it. But it's more than just to say, hey, that's a bad balance sheet or it's a dying industry. There's more to it than just that. There's this infiltration of companies and this retail apocalypse that bankrupting companies from within, doing the wrong thing on purpose. And I've sat here, I've made videos after videos, thousands of videos, literally, about AMC, about Adamar and his connections to private equity. I've made the videos about Ape and that conversion, how it's going to cost everyone all their equity. And you think about all the times, all these pumpers out here, the Thomas James, the trades, everyone out there that always say, oh, just buy and hold, and this is where we're going to go, and it's going to blow up tomorrow. Tony De Niro, everyone's putting out all this false information. And I'm sitting here trying to fight it, right? So I've got the next one. I've got the next distraction coming your way. And I'm making videos. And for whatever reason, the moles and the misinformation, it spawns after you make a video. So it's kind of weird to me. So I'm sitting here, and you guys know I talked about Mullen Automotive, and they lost 99% of that investment. Everyone who's ever been in it, and I told everybody. We talked about Bed Bath & Beyond, and that's like Pandora's box. That's the thing that really opened up my eyes to what private equity is. Now, I just saw an interview right now with Russell Brand and Tony Robbins. Guys, they're talking about private equity, and it's everything we've been saying on this channel, right? Everything we've been saying the whole time, like how they do it, why they do it, and who benefits from it. So I was like, okay, cool. So more people are noticing, maybe more people will be informed. That's a bigger platform, obviously, than me. Whatever. I don't care. I'm to each his own. But I will tell you this. You guys want to know what's coming? You guys want to know why they do this? Because they lost. That's the truth. When they have a 99% win rate on their investments, you are the 1% that they lost against. And they're going to realize that really soon. I mean, GameStop's profitable and GameStop's great, but we have such a long way to go because everyone's convinced that just because you cut losses and or fat and you chop down the SG&A and you become profitable, somehow that's just not good business because eventually you need to have a new revenue stream. And I don't agree to that. I'm like, well, profits are sustainable, therefore reward your shareholders, and now you have an investment. Now you have a running business. The individuals that seek growth, the individuals that push the envelope, that always want to expand, they oversaturate, they expand themselves, they leverage themselves, and they fall victim to private equity. That's been the playbook. So I'm talking to you tonight for a reason. And hopefully you guys made it so far that you understand what's happening right now. And I'm not talking about the GME token. I'm not talking about these other investments they want you to get into. Like they try to confuse you. Oh, you should be buying this. You should be buying. It's just like, really? Nah, I'm good. But let's talk about the ones that they have pushed out in front of you and said they're the same. Oh, these things move the same. Oh, they're both meme stocks. Everything's a meme stock. The company Carvana is not a meme stock. The company Carvana is a company that some people think is a valuable company that has assets, that has a name, that has a logo, it has a following. Guess what? It's 90% owned by private equity. Apollo owns 90% of the bonds along with PIMCO. So anything that happens to this company, they own it. And where are they going to drive it to? They're going to drive it to bankruptcy. There's no doubt. They were upside down $9 billion. Now it's $6 billion, but yet they've never made a profit in a quarter other than one quarter during the pandemic. They're going to lose $200 million this quarter. It's going to be announced this week, guys. We have a short week. The market's closed tomorrow. Carvana earnings comes out. Book it right now. 180, 190, $200 million loss for the quarter. And it's going to continue to happen. But what's the first thing someone's going to tell you? Oh, this is a great investment. You should look at it. Carvana, right? Okay. We know that that's not true. We know because of private equity, and we know them planning the executives on the board. Got it. Everybody's so tired of hearing about Marantz and connect the dots and well, you think you figured this out and you don't know. And I'm like, okay, tell me where I'm wrong. Because we walked in 2 days ago, we made a video, and we talked about Big Lots. We talked about Big Lots, and there's a reason why we talk about Big Lots. Because Big Lots is doing the same thing that Bed Bath & Beyond did, that Kohl's is doing right now. And the common denominator between all three is just not private equity. It's actual plants of the executives on the boards of these companies. The fact that the CEO of Kohl's was nominated and planted onto that board, moving out the previous CEO, so that Musellum and Kura and Legion Partners, the three hedge funds that run it, three hedge funds that have position in Kohl's, now tell you that Thomas Kingsbury's in charge. Thomas Kingsbury's only done companies that went bankrupt and or in that retail sector, the apocalypse sector, right? This is how they've been manipulating these markets. But more than that, he's also on the board of directors at Big Lots. And he didn't get on the board of directors at Big Lots because he's the CEO of Kohl's. He got on the board at Big Lots because Big Lots is run by the same three hedge funds, Musellum and Kura and Legion Partners. Those are the same three hedge funds that destroyed Bed Bath & Beyond. And they did the wrong thing on purpose. But here's the psyop. Here's the part that just kills me that you guys can't see it. So I want you to go over here. This is Twitter. And this is a guy's account who's a massive GameStop investor, who's a supporter of GameStop, who previously was featured on GameStop Rise of the Players. And you know how I feel about these documentaries. All these individuals that were in it, yes, they did hit big, but yet they push out the wrong narrative, as in it's already over, it's done, move on to the next thing. So this guy, whose name used to be GameStop Short Squeeze, has changed his name into Big Lots Short Squeeze. This is his previous name, GameStop Short Squeeze, and now it's Big Lots Short Squeeze. Okay? And if you go in here and you look, you'll see he was featured. He's an OG GameStop investor featured on GameStop Rise of the Players. So are you still a GameStop investor? I'm still trying to figure this out, but you have 30,000 followers. And with all the followers you have, here's what you put. You put things out here. You put graphs up saying, this is what GameStop is. It's going to go up. It's going to go up. It's going to go up. Epic short squeeze. We're bullish. We're this. But in the same breath, you start talking about Big Lots. And then you come out and you say things like this. GameStop's $1 billion cash on hand. They can buy Big Lots, right? We can buy Big Lots. We can do it right here. I'm really curious how much it would take for GameStop to buy controlling shares of Big Lots. It's trading at $130 million. And what would you say, big if true, GameStop could make use of those fulfillment centers they have, Ryan Cohen. Like all of these ideas that these guys are coming up with, pushing out that they're going to have mutual benefits and synergies, similar to Toys R Us inside a Macy's store, things like that. I think these guys are part of the PSYOP. That's just me indirectly. I mean, this guy has posted for the last 2 days everything about Big Lots. Like he just jumped onto this one day and said, I'm going to go with Big Lots, right? But the craziest part is if I go like this, just watch this. All right, we're going to look at Jim Cramer, okay? And we're going to go to February 9th. February 9th. I'm going to get all the way there. I mean, this guy posts a lot, apparently. Right here. Look at what he writes right here. Wow, both Big Lots and Children's Place and Jams take advantage of it by buying club name TJX. So Big Lots is in a jam, Children's Place in a jam, February 9th. All right? Let's go check out Wooch. Our boy Wooch. Wooch. Did he reply to it or did he type? Oh, he probably replied to it. No, I don't know everything, guys. Keep killing it, Wooch. We're going to get there right now. There's a reason why I'm showing this. I should have had this prepped and ready to go, but there you go. Inverse Cramer strikes again. Big Lots up 26% and Children's Place up 75%. So as he tells you to get the hell out of there, go somewhere else, they go up. This is part of what you want to do, inverse Cramer, right? But why do they bring up companies that private equity runs? Why is it that you have to be invested in the distractions that are against GameStop? Everything is a distraction against GameStop right now. I'm telling you guys because they don't want to tell you the truth. Private equity lost. They're the number one investors in the whole world. They use different tools, different financial tools than the rest of them. They're not just buying stocks. They're not just buying calls and puts. These guys manipulate outcomes, manufacture the outcomes, and they do it with their people on the board of directors. This is a fact. This is not something that people are just thinking up and, oh, this might be happening. No, it is happening. And until people start talking about it, more than just Tony Robbins and Russell Brand, they did an interview. You guys can watch it. 100% correct of everything they said in there. And guess what? You'll find all of that and connect the dots. We've been talking about it for the last year. Guys, pay attention to what happens with Big Lots. Pay attention. If you thought Ryan Cohen was trying to go into Bed Bath & Beyond and do a deal with Masellam and Kerr and Legion Partners, great. He got pushed out and tricked. You think he's going to do that again? You think he's going to pair up with Big Lots this time? Keep doing better business. Keep showing better numbers. And when it's time to expand, we'll expand. When it's time to get a revenue of some kind somewhere else, I guess, then maybe we'll entertain that idea as well. But it's not going to be Big Lots. And it's not going to be Bed Bath & Beyond. And it's not going to be Kohl's. This is not how this game is played. I went to GameStop today, guys. I don't even know what day of the week it is because I work midnights. I work 2 a.m. I work 3 a.m. I work 4 a.m. I'm working crazy hours right now. But I went to GameStop today. Went to go reserve a game for my nephew. He's been wanting it for like a month now. No problem. I paid him full. I'm there. I'm in line. There are 9 people in there walking around, shopping, talking, having a good time. 2 employees of GameStop. Everyone's happy. No one's disgruntled. People are working. People are happy. And the building's running efficiently. This is the business. Visit it, support it, enjoy it. But as far as the distractions go, I've been warning you for years, guys. And let me know when these flares go up and the warnings go up and you lose. I watched the Bob Marley movie. You guys watch it, One Love? It was phenomenal. Phenomenal. But the greatest line in this movie did not come from Bob Marley. It came from his wife. And she said, and I quote, "At some point, the messenger becomes the message." GameStop. Can't stop, won't stop. GameStop. I'll see you around, millionaires. Peace.